You don't know Jack, but Bad Crypto does, and you're about to meet him. His name is Jack Tatar, and he's co-author of the book CryptoAssets, the Innovative Investor's Guide to Bitcoin and Beyond. Jack joins us to discuss why crypto should be recognized as a top investing asset alongside stocks, bonds, gold, silver, and bills. We'll also tell you how one ICO raised $830,000 with Ryan Gosling as their site designer. And big news in the crypto world as the Dictionary of Record now recognizes cryptocurrency. Whatever the weather may be in your location, it's sunny and beautiful in the Republic of Bad Cryptopia. Prawns are on the Barbie, so grab a cool one and kick back for episode number 95 of the Bad Crypto Podcast.
5, 4, 3, 2, 1, 2, ignition.
Who's bad?
Hi, this is Joshua from Michigan. You're listening to the Bad Crypto Podcast.
The Bad Crypto Podcast is brought to you by Staff Virtual. Right now, the entire crypto space is full of like these rapidly expanding companies, and they're drowning in user support requests. So our sponsor, Staff Virtual, they knows what it takes to grow your company fast. And one of the hardest things to do is to deal with customer support. So if you're a company in the crypto space, check it out. They have an expertise in customer support, and they have applied that to the cryptocurrency space. Staffvirtual.com.
Boom. I hope you guys have started requesting your Bad Crypto Podcast stickers. Remember, we talked about this in episode 94, and if you're not sure how to actually get them, go to badco.in/094, because there you're going to find an address to send a self-addressed stamped envelope. All you got to do is put one stamp on the envelope, put your name and address in the middle of it, and then fold that up and put it in the envelope that you send to the address in Kansas City. We'll send you back 5 Bad Crypto Podcast stickers and 1 Bad Coin sticker. And you may or may not stick those stickers somewhere interesting, take a picture, and upload them on Twitter, Instagram, Facebook, and tag at Bad Crypto and use the hashtag StayBad. Make us to laugh. Make us chortle.
Now, Mr. Joel Com, is that something that could be awarded? Is that a bad coinable reward?
No promises.
No promises.
Because we're not currently giving away bad coin. But we are giving away bad coin stickers.
We are giving away bad coin stickers. That's true.
So stick it. Anyway, the address is in episode 94. And maybe, hey, Aaron, our producer, why don't you go ahead and paste that here in this episode as well so people know where to find it. Big show ahead for you guys here. So let's just get into it.
Bad Crypto voicemail. You have one new message.
When I listen to you, everything feels not quite normal, because I feel stronger and weaker at the same time. I feel excited and at the same time terrified. The truth is, I don't know what I feel, except I know I want you in my life every day, forever. Episode 89, will you marry me?
We got some news, Mr. Travis Wright, and one of them is around PayPal.
One of them is around PayPal. Pretty fascinating. PayPal just patented a crypto speed boost, and apparently it is solid for Bitcoin. So they want to boost the speed of crypto, which is interesting because PayPal has been on the forefront of sort of the moving digital dollars around in the internet age, right? And so now they have a patent that they filed last week that is detailing this new system that will transfer private keys outside of the blockchain to speed up transactions. This is off-chain solutions that will allegedly speed up crypto, Mr. Joel.
Well, it's just one of the solutions that's coming. Of course, Lightning Network is under development. And if and when that happens, and I believe it will, it's a lot of people think that that's what could bring Bitcoin to actual mainstream usage, right? Where people are actually using it as a currency. So we'll have to wait and see if that comes to light.
And if I like how this article says, if they come to life, being able to do those billions of transactions per second, Bitcoin could enter mainstream usage and shoot past its mid-December price high of nearly $20,000. But that sounded very speculative right there. Sounds like he thought he was a financial advisor who wrote that.
Yeah, because we are not financial advisors.
However, I would like to see it go past 20,000. That would be a fun ride again. Let's go.
I would
Yeehaw!
very much like to see that. So here's some news. Cryptocurrency, it's officially a word now. Because, a lot of times you go to use that as a word. And check this out. Cryptocurrency, it's a word now. It's actually a thing, because in the past you type cryptocurrency and it would try to autocorrect it. But the Merriam-Webster dictionary, which of course is the dictionary of record, has finally entered the word among 850 new words and definitions added this month. So it's not the only cryptocurrency term.
Yeah, they've added they also added initial coin offering, which was interesting. They also added the term unicorn as a startup, right? A unicorn is a company that's worth more than $1 billion. They added that. Microfinance, microcredit, those have also been added. Subtweet, mansplain, which should actually be person-splain. I'm not sure how that's supposed to work. And
are you really seeing?
Yeah, they added a whole bunch. I found another link, and they added and whelp.
So it's good to be recognized, right? I mean, this is just the beginning.
This is hilarious, Mr. Joe Kyle. I just, as we were talking about it, and I heard we were talking about it, but I didn't actually see this until. Let me go in. This is so funny. So, shady cryptocurrency touting Ryan Gosling as their designer, and if you look at the team, it says Miroski, our team, Kevin Bellinger. And it's literally Ryan Gosling. Like, that is so hilarious.
The only thing it's missing under it is, hey, girl, want to have some crypto? But they raised $830,000 for this thing. They're calling it shifty. Miroski attracted the attention of Reddit with its crafty marketing shenanigans. And numerous Redditors pointed out that all of the images of the team members were ripped from other people's pictures, that none of them are real, but the one of them is fake Gosling. And so,
which makes you wonder now it might have been a funny, marketing ploy to add Ryan Gosling as your graphic designer, but actually have all the other people be legit, because then that could have been funny. But when none of them are legit, I wonder if they even knew that was Ryan Gosling.
Yeah. So the website also has no white paper for its investors and has all kinds of promises on there that this coin has been tested for either offering users their own decentralized bank. There is a timeline for it, but 380 investors gave $830,000 to this. And I have a hunch they're not getting it back. Their Instagram account has no posts, no followers, and no following.
Do they have a Telegram? I want to talk to Gosling.
Yeah, I wonder if anybody's going to see these people ever again.
And that is one of the reasons, folks, we tell you to do your own due diligence on any company you invest, any company you do an ICO with. You want to look into it. Don't just take somebody's word for it because somebody said on YouTube that, oh my God, this is going to the moon. Like, you can't do that. This stuff happens. And this is not the first time this kind of crazy stuff has happened. So first time Ryan Gosling has had his own ICO, though. That's pretty fancy.
Yeah, I'm sure he'll be happy to know that. Well, you guys will be happy when you hear today's feature. This is a gentleman that you met on the blockchain cruise, right?
I did, yeah. And Jack and I had some fun conversations. Real smart dude. And he wrote a great book that if you guys are interested in investing and trading in crypto, reading CryptoAssets, his book, it would not be a bad idea. So just to get more good stuff in your brain, the more good stuff comes in, the more good stuff comes out. And great interview with this dude. You guys are going to like this.
Mr. Travis Wright, I enjoy talking to people who are knowledgeable about cryptocurrency because we're bad.
That is true. There are a lot of amazing thought leaders out there. And, we've had the great opportunity to bring several of them to you, and today is no different, Mr. Joel Comm.
Now, if I'm correct, you met this gentleman on the blockchain cruise. Is that right?
I did. I met Jack at the Asian blockchain cruise, and we had a few laughs there. And you know what? He said, we were chatting about having him on the podcast. I said, you know what? How about we have you on the podcast after I actually read your book? And so,
yeah, well, he's the co-author of a book called CryptoAssets, the Innovative Investor's Guide to Bitcoin and Beyond. He's an angel investor. He's an advisor to startups in the crypto asset space and a leading market researcher, business owner. And he's authored a bunch of books. He's also a publisher. And from our pre-recording dialogue, seems like he's going to be a fun and informative interview. So welcome, Jack Tatar, to the Bad Crypto Podcast.
Well, thank you very much, guys. It's an absolute pleasure to be with you. And Travis, good to hear you again, and that you made it home safely from the Far East there. So that's all good.
Very good. So you wrote a book called CryptoAssets, and you're being interviewed by a couple crypto ass hats.
Very good. And very good. And I'm taking it that you read it, since you said that you would have me on after you read it.
That is true.
So is that correct?
All right, I listened to the audiobook version, and I travel quite a little bit. And whenever I'm on the plane, I'll normally put my earphones in, put my hood over my head, and just close my eyes and then listen to books. And so, yeah, had a great time listening to yours. So, folks out there who are interested in the crypto space, CryptoAssets is the book, The Innovative Investor's Guide to Bitcoin and Beyond. So you guys take an approach about, trading and thinking about the cryptocurrency as an asset, more so like, a lot of people think about the technology, about blockchain and that particular thing. You guys, I think this is the first book that talked about crypto as assets and how you could potentially invest in them as a speculative tool. So great stuff.
Yeah, no, I appreciate it. Yeah, I wrote it with Chris Berniski, and Chris at the time was an analyst with ARK Invest, and ARK Invest was one of the first fund managers to put together an investment with Bitcoin in it. And I had actually written a number of books on retirement. So I was coming to it from the financial perspective. So when Chris and I met up, we really felt that there was a need for someone to explore the whole concept of investing in crypto assets and doing it from the prudent investing approach. And that's kind of what we tried to do with the book and tried to pull together for both the audio and the print version.
There's so many people that we see in the crypto space that are just all about making money, right? And certainly if you're investing, you want to make money, but you want to be smart with your investments. And blockchain is revolutionary technology. And I think there's just so many people that are focusing on just how can I 10X, my investment? And how do we stop those people from getting the attention? Because we're not going to stop them from talking like that, but how do we get people focused on what's really important here with blockchain and investing in crypto?
Well, what we've tried to do with the book, and I had written on this topic previously, is for people to take a look at crypto assets in the same manner that they would take a look at any other asset, stocks, equities, or things of that nature. And it's really my belief. And I mean, I am a believer in the blockchain. I am a believer in the Bitcoin technology. I believe that this will have societal impact above and beyond what we've seen. But it's my feeling that for this to really get out there into the public needs to understand this in the context of how they understand things currently. And from an investment standpoint, I wanted people to look at this as similarly to how they look at stocks and bonds. And as such, if you're going to invest in this, and once an asset is on an exchange and you're trading and you're buying it for another asset or you're buying it for fiat, you're in essence investing in this. So as such, you are now an investor, and you should be playing by the rules that have been out there for investors: asset allocation, modern portfolio theory, all of those types of things. So it's my feeling that if we get people thinking about this in the context of another asset, I think it'll expand the whole consciousness of people looking at this space and recognizing the impact that this could have. But if people just looked at this as a get-rich scheme and just said, my barber told me about this, my cousin told me about it, and you don't do it in the context of investing, then we run the risk of this being a fad and something that really is not going to take hold. So by having people look at this as an investment with the tools and resources that are available with other investments, then I think we have the ability for this to really take hold and really achieve the impact that I think it'll have on society overall.
So, and that's great. I think that, looking at this as an asset and not just a lot of people look at it, cryptocurrency, as, oh, it's a scam. Oh, it's a Ponzi scheme. Oh, only criminals use it. Right. And you guys covered that. And so you had, a few different parts of the book. You have the what in part 1, you have the why in part 2, and the how in part 3 of your book. And in part 2, you really kind of go into the details of that modern portfolio theory and how you construct a portfolio, and maybe examples of percentage of different assets that you place into your portfolio. If you maybe could touch base on that a little bit for our listeners. I think that there's a lot of people out there who are thinking about crypto and they're thinking about, traditional investing. And a lot of our listeners maybe don't even do traditional investing. Like, they've not invested in the stock market. They've not done some of those things. And so crypto is kind of a new thing, which is getting, different people into investing or speculating into these assets. And that's new for a lot of people. So maybe you could talk about your theory on the modern portfolio.
Well, let's take a look at what recently happened with the ups and downs in the crypto market. So for people who aren't familiar with diversification and being able to stomach the risk and the roller coaster that's involved with this.
Oh, I'm sorry. I just, my stomach got a little turned by all the ups and downs. That was because I can't handle all the ups and downs. Sorry. I didn't hit you there,
not too badly. I'm wiping it off now.
Clean up on aisle 3.
So basically, I'll keep progressing here. Although it's a little muck and mire here, where I am. But basically we've seen these ups and downs. And for people who are investors, and like you say, a lot of people may not be the traditional investors and may be getting involved in this and taking a look at speculating and maybe just running the fast tracks here that are going on with crypto. When you see something go down drastically, and we've seen Bitcoin go down 50% at times. And for a traditional investor, there's a need to diversify to protect yourself against these types of wide swings in the market. So people will invest in stocks and bonds because they move differently. Stocks go up while bonds go down. Bonds go up while stocks go down. So in taking a look at the crypto market, we wanted to take a look at whether or not there's a correlation between the price of cryptos and the price of other assets. And as you know from the book, Travis, we've gone through an extensive way of looking at how correlated are crypto assets to stocks and bonds. And the reality is what we found is that there's no correlation, that it is a non-correlated asset, which basically means if the stock market was to crash and go down, that wouldn't have an impact on your crypto. And that provides diversification. Now, similarly, when you have crypto that goes down significantly, the thought is that you'd have stocks and bonds would not be impacted. So you'd be able to stomach a lot of these wide swings in the market that we've seen with crypto if you had diversification into other assets. So the whole ability of putting together a portfolio and an investment portfolio that's based on different asset allocation models and percentages can help people to weather these fluctuations and also be able to basically build a portfolio that's effective for them based on their stage of life. I mean, for a guy like me who's a little bit closer to retirement than Travis is, I want to protect my assets. So for somebody like Travis, who maybe has a little more working time, he may be able to take a little more risk with crypto. So it's all about building an allocation model that works for your particular situation.
Travis told me he was going to retire next year and go get his own private island because he's sick of people.
That was after I buy my Lambos.
You're going to drive your Lambo through.
I'm going to get a Lamboat.
Well, Jack, investing because of crypto, the mindset has shifted, especially among millennials. In fact, we saw a survey recently from Blockchain Capital and covered this a bit, that 30% of those that are aged 18 to 34 would rather invest $1,000 in Bitcoin than $1,000 in government bonds or stocks. You deal a lot with, the retirement space. And so that's riskier, for, like, as you were saying, for somebody that, hey, I'm retiring soon, need to keep my money in place. But what do you think, is this trend with millennials trusting crypto more than bonds and stocks, just going to increase?
Without a doubt. And I think it's great. I've often said that I think crypto is like a gateway drug, investment drug for millennials, because what we are doing and what we've seen, and I think of this own situation with my kids, they went through 2008 and they saw the stock market collapse. They saw friends of theirs, fathers, lose their jobs. And they basically looked at the stock market and said, you know what? This is a rigged system. This is like a casino. Why would I invest in this? And so when I was growing up, it was, if you had a couple extra bucks, go put it in a Vanguard fund, go put it in a mutual fund. Well, what we're seeing right now is we're seeing millennials are saying, the heck with that. I'm going to put it in crypto. I can get the action in crypto. And the reality is I understand it better. And also it doesn't have all of these players in there who are mucking up the system and rigging it for their own way. So what we're starting to see is millennials go and invest and make their first investments into crypto. And I think it's great. But also, once you start doing that, you have to recognize that you still have to diversify. So what we're seeing is millennials going into these investments, and they're recognizing that maybe Bitcoin goes up while Ethereum goes down, or I made a killing on Neo, but my Bitcoin didn't go anywhere. So I'm going to diversify and I'm going to allocate amongst these different asset groups. And that's great. I think that's great because now people are starting to learn about diversification and all of those different things, which I think will take them later on. I'm not saying that they have to then go and invest in stocks. I don't know what the stock market's going to look like. I don't know what investments are going to look like 10, 20 years from now. But I do think that a lot of the things that we've learned about investing will play out regardless of what type of assets are out there. We're already seeing the ICO market really making an impact on the traditional capital raising markets that we've seen with the financial service companies. And I think that's a great thing as well. It's making it much more democratic. It's allowing people to get into things. It's also forcing people to have to do their own education and their own due diligence. So all these people, these millennials who are getting into cryptos, my hope is that they're educating themselves and they're learning as much as they can about the cryptos they're going into. And so many of them are learning about technical analysis as well. So all these are good tools and resources that they're going to need to have for investing down the road. So I think it's all a good thing. And I think what upsets me very much from the financial service area is how the existing financial service companies are not allowing any of their financial advisors to even discuss Bitcoin with any of their clients. So not only are they keeping the ability for their clients to earn substantial returns, they're also not allowing themselves to speak to the next generation. So all of a sudden that next generation is going to grow up and they're going to have assets. And now the financial service companies are going to say, oh, okay, we're ready to talk to you now. And you know what they're going to say? They're going to say, the hell with you. You didn't talk to me before. You're not talking to me now. So they're going to lose this whole generation because of their insane approach towards crypto assets.
You know, you hit the nail on the head right there on a few different points. One of my good friends I've known for 25 years, and he's a financial advisor. And with the company that he works for, he does not even feel comfortable searching for anything on his phone or his laptop that has anything to do with crypto, because he knows that they're monitoring his devices. And so he has his own special laptop and his own phone that he'll use to listen to podcasts and to do research on that space. So it is interesting to see how the old guard is viewing this, and you can tell, they're threatened, and they don't fully understand it. I mean, I've had conversations with people who have worked in banks for years, and then I'll ask them what they think about cryptocurrency, and they'll give me that, oh, like what, like Bitcoin? Oh, like, isn't that only criminals using that on the dark web? Like really? Like, you got your talking points down there. So it's I think it's not even the fact that it's systematic, but I think that they are keeping information away from a whole lot of people, so they're not doing their own due diligence in the space. Would you concur?
Oh, absolutely. I would totally concur with you. And I think it's a real shortcoming of the whole industry. I mean, when we heard over and over Jamie Dimon, who our friend at our cruise, John McAfee was calling Jamie Demon, which I thought was very interesting. When Jamie Dimon is out there calling this a fad and a fraud, he's not doing any service to his customers, because he's basically telling them to ignore this. So he's telling them to ignore the returns that these assets have earned. He's telling his advisors to ignore this, so they can't discuss this with their clients. I mean, can you imagine it? Here I am a client with a financial advisor, and my son is out there making 30-40% in crypto assets. And I call my advisor, and my advisor says, oh, hey, you should be happy we're making 7%. And it's like, well, wait a minute. Why can't you get me into something my son is making 30 or 40% on? Oh, no, we can't talk about that. We can't discuss that with you. We can't even find a little sleeve in your portfolio as an alternative asset, which I think crypto assets does fit the criteria as a alternative asset, that we can't even find that in a person's portfolio. We can't even discuss that. It's so short-sighted. They're going to miss the next generation. But what they're also doing is they're not doing justice to their clients by not discussing these things. And the reason, Travis, they're doing this is because they have not figured out how to make money with this. And that is the big secret of the financial service industry. They will tell you to buy anything if they know how to make money with it. They haven't figured out how to make money with Bitcoin. Now they did figure that out with the futures markets. So they opened up the future market, and now they know how to make a little bit of money there. What we're going to start to see is you're going to start to see ETFs. You're going to start to see mutual funds that are going to come out. And then all of a sudden the financial service companies are going to start to say, oh, you know what? We had a change of heart here. We can discuss this with you, because they figured out how to make money on this. And then when they get to that point, then they're going to start bringing in asset allocation and all these other things. But why haven't they been doing it prior? And the reason is because they have not figured out how to make money on it. They will, and you're going to start to see them talking to their clients over the next couple of years, because we're going to start to see ETFs and we're going to start to see mutual funds. But that's the reason that they haven't just been discussing this with their clients, and they've been doing them a real injustice to their portfolios.
Jack, we've heard that there's billions sitting on the sidelines, waiting for the time to come in. Do you feel like it's that they're waiting on regulation? Is that what it, comes down to, where there's some safety net for them, that, there's this agreed upon way that the government is going to deal with this?
Regulation is definitely something that the firms are concerned about or interested in. They have to be because we've had so many changes that have happened in the industry. The Department of Labor regulations, where every advisor has to be a fiduciary when they're managing clients' retirement accounts. The regulations that are out there require the firms to really play ball with what the regulators are saying. So yes, they are waiting on the regulators, and the regulators are a roadblock here. They're still trying to get their arms around what this is and understand it and step forward in a manner that doesn't kill this, but allows this to continue to grow. And I think there's a responsibility on the part of the community to educate. And I know there's some great groups out there, the Chamber of Digital Commerce and some other groups out there who are meeting with lawmakers and regulators to try and inform them on what's going on here. But yes, I do think the firms are waiting on the regulators, just from the perspective of what Bitcoin is, and also from the perspective of ICOs. ICOs is another big problem. I mean, right now, you guys know this. Right now, you want to get into an ICO and you're just a typical investor. A year ago, anybody could have gotten into any ICO. Now you can't get into an ICO. And the reason is if you don't have enough money, you're not an accredited investor, or you're a U.S. citizen. So if you're a U.S. citizen, you can't get into ICOs anymore. I mean, it's outrageous. And it is a problem with the regulators. The regulators need to kick it up. They need to step it up. But I also think there's people in the community who also need to help educate the regulators and help them to recognize what we have in front of us here.
Now, you bring up a couple interesting points there that I want to talk about. Now, so we have a show once a week where we have, 2 or 3 ICOs on. We call the ICO Spotlight, and those shows are typically sponsored. But we go through an evaluation process on each one of them to ensure that we're bringing on, quality, different projects, because there's so many different ones going on. We like to kind of mix it up and have ones that are doing unique things, that are trying to solve unique problems. And so, from your perspective, what are some of the key points that maybe you look at when you're evaluating a crypto asset?
Well, in the book, we talk about evaluating ICOs, and it's a very, very important role. I mean, I come at this from 2 perspectives. First of all, I have an investment firm where we are constantly reviewing ICOs, and we are working with a lot of startup businesses here. I view them no differently than I would view any other business that I would be investing in. Do they have a business model? Will they have customers? What's the competition look like? All of the things that go into understanding any type of a business, you have to evaluate that. Now, that being said, there are some very specific things with ICOs. The white paper. How detailed is the white paper? The white paper is very similar to any stock or fund prospectus, where they lay out, this is what we're doing. So the white paper is always a starting point for you to look at. The thing that's very important for us is who is on the team. And the team is typically made up of 3 aspects. Who are the developers? Who's the management team? And then who are the advisory team? And yourself, when you look at ICOs, you see a lot of people who you've met, a lot of people who who are involved with the project, and it gives it somewhat of a seal of approval, so to speak. From the developer standpoint, it may not be that easy to evaluate who the developers are, but you can go in and you can see where they were involved with other projects, maybe where their background is, and all of those types of things. I find it really interesting when we were researching the book, there is, and even beyond that, there's a wealth of information that's out there with sites like Crypto Compare, where you can actually go in and you can see how active is the developer community and how active is the regular community around a certain thing. Now, these may be ICOs that are out there in the market, but people have to get familiar with using these resources out there. So those are some things we want to take a look at. Travis, I mean, you hit the nail on the head. You have to do due diligence on these ICOs. We have seen so many ICOs that have come through that are absolute garbage. And when we evaluate an ICO, we will say, one of the first questions we say to someone is, why are you raising money through a coin versus through equity? And a lot of times I've spoken to companies that say, well, right now the easiest way to raise money is through coins. If that's why you're raising money through a coin and you couldn't do it through raising money for equity, it's not an investment I want. I look at companies in a similar way that we used to look at IPOs years ago. Would I buy into this company? And the coin has to be an integral part of their business and not just something that they're doing just to raise money. So that's another thing that we take a look at as well when we evaluate these ICOs.
Well, let's talk about some currency specifically. You co-authored a work called What's the Deal with Bitcoins? I kind of hear Andy Rooney. What's the deal with Bitcoin? And, Bitcoin has had a wild ride up the end of 2017 and then, found its dip here in early 2018, currently sitting a little bit below $12,000. And I don't know if you like to look into the crystal ball and make some predictions, but I am curious where you think we're headed in the short term and then end of year.
Well, in the short term, I think, and I'm saying this strictly from a technical perspective, I think we've got to get over the $12,000 hump, and we've got to basically start to form a little bit of a base over 12,000. And I think if you look technically at the charts, or the charts that I've looked at, once we get over 12,000, then I think we're at a point where we can get into a new trading range. How high that trading range will go, I don't know. Part of what's going on with Bitcoin and the increase in Bitcoin is around the utility value of Bitcoin. I mean, right now we're at a point where we've gone past the speculative value of Bitcoin. They're still built into the price, but we need to see some more utility value. And I do think that there is a little bit of a wait and see around some of these scaling issues that are going on, some of these topics about SegWit and some of these transaction speeds that are going on that I think the marketplace wants to get more comfortable with. And so I think once we see that, then potentially we can really see a run up. I know in terms of, I think the last prediction I did, and I've decided not to do predictions, but the last prediction I did was last year, where I basically said that we would hit 20,000 in 2020. And that was really because of the alliteration there involved with 20,000. But I do think that we have the potential, if we are able to break through this range and get into a new trading range, we see some of these issues worked out for Bitcoin, where we could potentially see 20,000 by the end of this year.
Now, I want to ask you a question, like for the skeptics, right? Because I mean, we've had some people like in our mastermind group who've they're like, oh man, we've heard that, James Altucher said that 90% of these ICOs are scams. And so why are you promoting ICOs on the show? Don't have ICOs on. And then we've also talked to folks like Ian Bellina, who, has a pretty big reputation of doing some deep analysis on some of these ICOs. And he was able to create pretty substantial wealth by investing in the right ICOs. And so we don't really make recommendations on bad crypto. We don't tell people what to invest in. We just tell people like, here's some cool things that are going on. Here's the problems that they solve. And here are some interesting things that's going on in the space. But we don't ever make recommendations because we don't think that's wise, because we're not financial advisors. Now, what is some of the advice that you would give someone who is maybe sitting on the fence, thinking about ICOs, or they're thinking about investing in some of these crypto assets? What is something that might help them in their research to maybe get off the fence?
Well, I think you have to have a healthy skepticism about the ICOs that are out there right now. So I think that's a fair thing to say. I wouldn't say 90% of them are a scam, but there's a lot of them that are. I think you've got to view this from the perspective of, if this was a business and making a business case and was going to have something that people were going to use, and in essence, live up to the promise that's in the white paper, does it really have a shot at doing that? And I mean, the easiest thing is if you see a shoddily written white paper, or you don't see things put together well enough when someone is out there asking for your money for a coin, then avoid it. Because I think the reality is the good projects that are out there right now are projects that have already gone through angel investors and early stage investors like myself and other funds that are out there, where they've said, let's put something together that really looks good. So we put our best foot forward when we do our ICO. I mean, that's the whole point. You want to put your best foot forward when you go and raise money. IPOs do it. And an ICO should do it as well. If an ICO is out there just raising money and they've had no other money and they're out there doing an ICO to raise money, to me, that's a red flag. I would rather invest in an ICO that seems more professional, that has probably gone through some pre-seeding or maybe some seeding with an angel investor or with some investment group, where they basically have that product looking good. They can answer all the questions that are needed for raising money, and they're not raising money just just for the point of raising money. They're raising money to now build the business that others have invested in. And they're not easy to find, but you can find them. And that goes back to that healthy skepticism that you have. And it also goes back to going through the white papers, reviewing the white papers and seeing who was involved in the project and who are the developers and all of those other aspects, and viewing it as if it was any other type of business.
Well, Jack, the one question that our listeners really want to know the answer to is when Lambo, when Moon?
Well, I think the moon is still a few years away. This is not going away. This is totally not going away. And there are some great projects that are being undertaken. I mean, we see many of them that aren't even coming to the ICO stage yet, that are absolutely going to knock people's socks off. So there is still stuff out there that's coming forward. And this is going to change the way that people invest and the way that money gets raised. So to the moon, we're still far away from even getting to the moon, I think, at this point.
That's fine, because spring is coming and I don't mind, my socks not having them, because, I'm a flip-flop kind of guy.
Right. Well, the Lambo, if you make a good call, you make some money, great. But I have to tell you, what I'm seeing from people is less buying Lambos and more making a profit and reinvesting it into the space. And I think that's a good thing.
Less Lambo, more Rambo.
Right.
Jack, what about, so you guys are doing research on ICOs, you're doing research on crypto assets now, and you'd mentioned that there are some that are coming up that's maybe going to blow people's socks off, and it's a really interesting space. So maybe and I know, not from a financial advisor perspective, but maybe what are some crypto assets that are in the pipeline that are coming up that we may want to do our own research on?
Well, I think the thing that I'm seeing right now are not so much applications around, like, everybody talks about, got to have something in real estate, or you've got to have something in some of these existing business models. What we're finding to be very exciting are the more technology and platform-based solutions that are out there. They may not be as sexy as saying, look, here's a new way of people making money on real estate, but they could be technology very similar to what we saw with the project Filecoin. I mean, Filecoin was a very ballyhooed ICO a while ago. Basically, introduced the whole SAFT approach, where basically people would be able to get paid for disk storage, and it's a very interesting concept. But that's a concept that has a business model, but it also has a technology model to it. So I think where we're really excited are those technology based solutions that are out there, because I still think we're still at an early stage with the blockchain and the crypto space, and we still need to get a lot of the foundation, a lot of the infrastructure built. And I think that's where I would be looking right now for those companies that I think are going to last into the future and be the real gainers down the road.
Well, Jack, thanks for joining us today and making us just a little less bad. We appreciate it. The book is CryptoAssets, The Innovative Investor's Guide to Bitcoin and Beyond. Find that where all fine books are sold. And your company website, gemresearchsolutions.com. And what do you guys do there?
Well, we're actually that's just one of the companies that I run, but that we're actually a market research company. You mentioned before the book, What's the Deal with Bitcoin? That actually grew out of some of the work we were doing in the research space. I would also send people to bitcoinandbeyond.com. That was a site we built specifically for the book. And there you can find updated articles that are written by Chris Berniski and myself, as well as linking to our Twitter feed. So that's probably a little more crypto asset based.
Yeah, that was great. We did notice on the crypto resources page that Bad Crypto didn't seem to be able to put their resource on your site.
Travis, the thing I have to tell you, and I am saying an apology here, and we do need to update it on the site. But what was interesting is when we wrote the book, we basically had to have that book done about a year ago. And so we had to be very concerned about some moving parts. So I apologize.
We weren't there. We weren't there a year ago. Well, we weren't even born a year ago. This is,
So I apologize, but that was when the publisher wanted us to have this done. But we will update it on the website, and we'll put a list of some podcasts, and we will definitely list you guys. So I'll make sure of that.
Yeah, you can make it up to us, Jack, by just putting us front and center, and screw the rest of your content. Nobody needs
That's
that.
all right. No
just
problem.
Link to Bad Crypto.
No problem.
Thanks, Jack. Appreciate it.
All right, guys. Thanks a lot. Appreciate it.
Good stuff, Mr. Travis Wright. And I hope you got your bags packed because we're hitting the road.
We're going somewhere else? Where are we going now? I should probably look at my calendar.
Again.
I should look at
going to Austin for South by Southwest again. Yeah, we're off to see the Wizard and to meet with over 1,200 people who have signed up for the Bad Crypto Meetup at South by Southwest. And it's not too late to register at badco.in/meetup if you're going to be at Austin. And that is on the 10th, I believe. Is that correct? I can't keep all the dates straight.
I'm not sure. What is the demographics of those 1,200 people? Is it like 97% dudes or what? Do we know?
I don't know. We're going to find out. We hope there's some crypto chicks there, but it happens at the Chug and Monkey on the
Chug and Monkey. We're meeting people at a place called the Chug and Monkey.
Yep. Starts at 5:00 on Saturday the 10th.
I was not consulted with this.
And we're also on the 9th, we're doing Bad Crypto Live at the Crypto House. You have to apply to come to this one because this is going to be a highfalutin deal.
Invites are already done on that one. Got to know the secret bat phone at this point.
And we are waiting on a final agreement to come in for one more appearance that we intend to do, I believe, on Tuesday the 13th. For another crypto event, and we'll
Summit.
So we'll let you guys know about that. But the shows from this week or this next week are going to be a little this, little that. We might interrupt our regularly programmed schedule to bounce out another episode from Austin. We're going to meet all kinds of interesting people there, so we're going to be flexible. We'll have our portable studio with us, and we'll see what happens. But we're looking forward to it.
Yeah, there are some amazing people that have signed up to come through some of these events. There are a bunch of bright folks in this space. And if you're at South by, hopefully you can come by one of those events where we're going to be at, because there's a lot of really cool stuff happening around crypto at South by Southwest starting tomorrow, Mr. Joel Comm. That's great.
Yeah, going to be exciting. So we're on our way. Hope to meet you guys there. Make sure and come by. And when you do, tell us to stay back. The Bad Crypto Podcast is a production of Bad Crypto LLC. The content of the show, the videos, and the website is provided for educational, informational, and entertainment purposes only. It's not intended to be and does not constitute financial, investment, or trading advice of any kind. You shouldn't make any decisions as to finances, investing, trading, or anything else based on this information without undertaking independent due diligence and consultation with a professional financial advisor. Please understand that the trading of Bitcoins and alternative cryptocurrencies have potential risks involved. Anyone wishing to invest in any of the currencies or tokens mentioned on this podcast should first seek their own independent professional financial advisor. Less Rambo. More. Wait a second. That came out wrong.
Who's bad?
All new Ellen.
Well, he's a gentleman in the streets and also a gentleman in the sheets.
The one and only George Clooney.
Like I know. I don't know. I just make stuff up, but I think that's right.
Ellen, today at 3 on NBC for New York. Then at 4, get 20 minutes of uninterrupted news, plus your exclusive 10-day forecast, all before the first commercial. Join Stephen Holt, Natalie Pascarella, and Dave Price for News for New York at 4 p.m. Today on NBC for New York.